Hey, good afternoon, everybody. This is Mark Coe for September 26th. Approaching the end of the month here and wanted to take a look at where we sit. A couple updates on the model. So as we get into the end of September, model has closed P&L. Remember, it's based on either a one contract or in FX, it's based on a one standard lot. That's what we're basing the P&L off of. But closed P&L here in September. These are closed P&L, $3,400. Again, that's a good guideline. That's the model. The model sits with open positions short, pound dollar. We'll see how that closes today at September 26th, whether or not that takes profit. Aussie, same thing. It sits short from 80.29. Pound just barely negative today, and Aussie down, I don't know, about 45 ticks as I record this video. So you'll see pound improve that P&L if things stay as they are, and you'll see Aussie improve that P&L. So that's where we sit. Just a couple model updates. We've had a real nice Monday and Tuesday. We've been in the room open house and had a lot of guests, which has been great. And wanted to point out a few things we've been able to do in the room live. So euro dollar closes its model position last night at the open, which was 18.48. So euro we sold on Friday. Yeah, we sold it on the 22nd. Sold euros on Friday. You can see it, this red line. So we booked profit, which was nice. So nice little profit in euro that contributed to the daily model performance in September. On the day, not a whole lot to make of euro. It was exploring some bottom edge counter trends, but not much developed there. Gold was kind of interesting because gold has sold off, from 13.17 overnight highs down to 12.96. I was using a buy zone for my morning report down in the mid 1290s. So on an approach down into that, it became very interesting to me. So I was able to do two trades in gold on an intraday basis, just shorter term stuff. But what was so nice about it was you got a move lower as Yellen's comments are hitting the wire about she wants to make sure she stays ahead of inflation. So it's in this movement right here that she creates that for us by her comments. And all that really happened, as you see the acceleration higher yesterday, is that gold traded into this zone. So I start my buying here. I paid a quick stop and was immediately out of that one, only to re-enter at a better price with a bigger position. So thank you, Miss Janet, for that. But this I was all doing in the room, which was pretty quick, but it was nice because the levels have been there. You realize what you're trading against, and as the market is selling off into that, you're not kind of stressing. You're not wondering what to do. You know what you're going to do because all day long from the U.S. Open, I know I've been wanting to be a buyer of gold into that weakness. So it was worked out really well. Not massive, but again, profitable in that sense. So it was really good. Dollar yen made new highs in the U.S. session up to that 12.48. So, it still stayed underneath 12.70 resistance and nothing overly exciting. S&P, so I want to talk about S&Ps. On the model trades, S&Ps is short. S&Ps are short from Sunday night. We were filled at 25.04. So 25.04 is containing the entry on the S&P. And yesterday, during the live U.S. session, I was able to take some profit at what you will see here as soon as the chart refreshes. But it was at bottom edge, right? So I'm kind of marrying the two ideas here. I'm looking at the idea of a longer-term model trade, but using my knowledge and abilities to deal within levels on the shorter term to try and enhance those returns. And so what I did here, I sold the S&P. You can see on this move, the high of the day was 0450. I sold 04s. And I didn't cover at the low of the day, but I covered in this zone. I covered 87.25. So again, my job's to be short S&P, but I can't ignore the level and I can't ignore what's going on here. And so, I book the profit down in here, and then I sell them again at the early Asian Open. I sell them at 96. So I maintain a short model position, but again, trading around it using the levels. And that's really the key to be able to trade around those longer term positions if you so desire. The daily model does well on its own without any involvement of a human, but when we have this ability to read the levels and see what the market's reaction is at levels, there's certainly some risks involved. My risk in the S&P was that it didn't get contained here, I would have had to sell them out lower. So I would have given up money. But in using my decision at that level, what I did was average my price. So rather than having an entry price here, I can take that entry price and ratchet it up here for the same P&L. So the idea is that I just put a little money in the bank and I'm still trading around that position. But how did I do it? I used the levels. So that's always a key to me. So I hope you guys joined us for the rest of the week. It's been a great Monday and Tuesday. Some exciting things in the works here, and hope you guys have a great rest of your Tuesday, and we'll chat with you soon. So for September 26th, it's Mark Coe. Cheers.